Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Well, I've been posting individual buy recommendations that are short, 6 minutes or so. And I wanted to do that because I think that it's easier for people to watch. But I think every couple of weeks I should go over all of them together and kind of give you some sort of order and what out of the 8 buy recommendations that I currently have, which ones I'm focused on and what I was buying on Friday and what I'd be looking to buy on Tuesday. So with that, let's get into it. Any comments on that are welcome. So the first buy recommendation is the iShares of Saudi Arabia, symbol KSA. And this is a weekly chart. So each one of these bars represents a week of price action. And you have a consolidation. If you can imagine over on the left-hand side of the chart, a big spike upwards for a year where Saudi Arabia equity prices soared. And after something like that, you get a very overbought condition, uh, highlighted by the overbought relative strength index. You get a consolidation, and consolidations can be corrections or they can be consolidation, sideways consolidations, and that's what I think we have here. So this is in the form of a symmetrical triangle, which are normally continuation patterns. And I've had to redraw this triangle twice now. You can see my initial buy recommendation was on 221 at 42.03, and I got stopped out at 38.56. So I jumped back on this train. I waited and waited and waited for this to develop. And on February 6th at 39.75, I went bullish. And on that call, I suggested there may be a pullback to this confluence of moving averages or rainbow convergence. And if they type 2 convergence would bring prices back to that. So I said, I'd be buying this now and I'd be adding to that on pullbacks. And that's what we've gotten over the last week. So I've been adding to my position and I suggest that you do the same. This pattern is not intact yet, but I'm buying it before it's broken out, similar to what I've done in. The issue is when things break out of a consolidation like this, they can go really fast and furious. And then all of a sudden you're jumping in when the stock is 10% higher, and then your reward to risk is no good because your stop is way down here. The time to buy these, I always look at reward to risk. I need a reward to risk of 3 to 1, three that being gains to losses. And right now I have a very favorable one, with I don't know, maybe 1.5% potential downside, and the potential upside if we're able to break out of this. We measure the base of the triangle, we project that distance upward, and you come up with $53, which is 32% higher than where we're at now. So I like to reward the risk, and I'm always trying to buy things. What's the Gretzky saying? Skate to where the puck is gonna be, not to where it is. That's kind of my philosophy. Like, I'm not a huge buyer of Brazil now after it's up, 25%. One of my recommendations. I'm buying thing. This is something that I would be looking at really hard. And I also like to look at point and figure charts. These are the purest, least subjective charts, just measuring really supply and demand. Number one, I want a bullish trend line, which we have. This isn't generated by me. This is just based on the price action. And then we have a big consolidation after this index skyrocketed back in 2021, which is a sign of strength. And the bigger the base, the bigger the breakout. And so I really like Saudi Arabia here. Another recent buy recommendation is on India. And this is a small, the Saudi Arabia symmetrical triangle is over 3 years in the making. This one is, a year and a half. Still a good sized pattern, just not as big as Saudi Arabia. And so we've got our symmetrical triangle in development, and we still have the same kind of thing going on, trying to get involved in it before it breaks out. So, I purchased on February 1st at 53.53, and we're currently at 52.89. Um, and and so that's kind of where we're at on India. I don't like that this broke down on Friday below, but the market was down a lot. This was, I guess it ended up pretty much flat, but I'm going to give it a break here, and so we're going to go from there. I'm bullish on India. Healthcare. This is the healthcare ETF, FXH. And this is again a big pattern. 1, 2, 3 years in the making. It's like a man or woman hanging upside down with the neckline, the left shoulder, the head, the right shoulder, and with the breakout here, this pattern is intact. And if we measure from the bottom of the head to the neckline and you project that distance upward, you come up with 138, which is about 20% higher. And again, my risk is at 112. That's where my stop is. So you've got what, 1.5% potential risk and 20% potential gain. So your reward to risk is, I don't know, 7 or 8 to 1, which is super attractive. I also like this healthcare ETF because it's outside of energy, it's outside uh, of commodities, it's outside of emerging markets. Healthcare tends to be healthcare, REITs, utilities also tend to be defensive sectors. And so I like having this in the portfolio. On last week, we had a bullish hammer where prices opened at the top of the week price action, intra-week traded down, and then ended up right back up to the top. It showed me there were buyers in there. And so that's where we're at on healthcare. I like the setup right now. Gamestop, this is one that's gotten a lot of attention. Again, I look at these without a name on them. And let's see that I don't know that this is GameStop. And I look at this 1.5 year symmetrical triangle. And I look at the fact that we have a confluence of moving averages right below the price action currently. And knowing that when things like this break out, they break out in a hurry, similar to some of the other buy recommendations that I've had. We bought them before they broke out. And so if you measure the base of this triangle and you project that distance upward, you come up with a $72 price projection. And we're currently at, let's call it 24. So what is that? 48, 68, 7, 200% potential upside. So I don't have a stop though. This is such a volatile stock. It's hard to have a stop on these. And so that's why it's not my number one pick because I don't really know what my risk is here at the time being. So that's why it's the third buy recommendation I'm showing you. But it looks great. It's holding up well in a down market. The iShares Commodity Index. This is one I've been on for a while, as followers know. Bought this back on August 31st at 22.77, and we're up to 24.72. And I said when I purchased it, I thought the lows for oil were in, and it happened maybe a couple months later. I think in November, actually, crude oil bottomed, if I recall correctly. If I don't, no big deal. But this ETF is very energy heavy. It has 70% in oil and natural gas. So and that's why I chose this because the metals had already skyrocketed. And again, as the Wayne Gretzky saying goes, I skate to where the puck will be going, not to where it is. And that's what I think about a lot when I look at investments. So Um, we have no negative divergence on this peak, this recent peak. And again, I was telling people, look at it, we had three, four up weeks in a row. I said, you should be selling a little, selling a little, selling a little, and now I'm buying some. So uh, that's why I have this number four. This is just a daily chart. So this is a weekly chart. This is a big pattern, 3 years in the making. And then I'm going to take a look at this small triangle that we have here and the price action, a big skyrocket upwards. And it looks like, hopefully, we're tracing out a smaller triangle here. And I like that as we hit this peak, again, we have no negative divergence. So that tells me there should be another high coming where we will get a negative divergence. And then we'll want to get out of this thing. Um, so this is a sign of strength if it's a consolidation in the form of a triangle. I really need to get a stop in this. So most likely my stop is going to be 24.2 would be here. So, but I'll leave it without it for now. Oil's volatile, and we'll look at it during the week. Okay, this is one that's not going our way. This is K-Web. This is the uh, China Internet ETF. And as you know, even here, technology's been getting killed, and it's kind of spilling over into the Chinese Internet ETF. So what I'm seeing here is this big pattern. That's why I want to own this. And the price projection is 50.65, and we're currently at 33. That's 17 points higher. I don't know, 40% higher, 45% higher potential. And we have a confluence of moving averages coming together with prices breaking down. And it's getting pretty close. This is a weekly chart. Each candlestick represents a week of price action. I wouldn't be surprised to see this go a little bit lower, but I'd be buying that because we're getting near a low here. We have support right here as our bullish trend line. And once we get a rainbow convergence where all these come together, this down move will slow down at a minimum, or it will retrace back up to that confluence of moving averages, and then we'll have to make a decision on whether, if it doesn't break through, whether to sell. If it breaks through, then we're off to the races. So there's going to be a lot of action here, but I do think this is creating an opportunity. This is a point and figure chart. So here we are. This also is going to tell me when to get out. If this breaks the bullish trend line, I will probably get out. There's too many good things out there to fool with it. But the upside here is really, really big. I would guess if it's 31, this bullish trend line will be gone. And I'll have to make a decision and let you know at that point. Okay, so two I wouldn't be loading up on right now. These have had a big move already. I was tempted to go to a neutral rating on them, but I'm going to have be a little more patient with this. So this is the big symmetrical triangle going. This is 1, 2, 3 years in the making. Here's where we went to a buy rating, and the price projection is 212. We're at 184, let's call it. So we don't have a lot of room left. Even with this up week last week in a down market, we're overbought, but not in a huge way. Look at how overbought we were back here before we got a higher high here. We got a lower high, flashing a caution sign. This is a change of trend is coming with a negative divergence. We don't have that yet. At some point, we will have a downtick and then hopefully another higher high, and we'll get the same kind of thing that we had over here. And that will give me an idea or, flash a caution sign to me to go to a neutral rating on it. But I don't see us being there yet. But again, your reward to risk now is less favorable than when I purchased. I had my stop at 146, and bought at I'm sorry, yeah, 146 and bought at 157. Now my stop is at, I can hardly read that, 160. And we're way up here. There's nowhere to put a stop because this has gone vertical. So yeah, the reward, that's why I like to buy these before. There's a little added risk doing that, but you're not chasing. I hate buying. I don't buy on green. I don't buy when things are up on the day. I buy when things pull back. Here's Brazil, real similar. This is a 1, 2, 3, 4, 5, almost a 6-year pattern. This is gigantic. Broke out, went bullish. This I did wait for it to break out. It actually broke out and then it started going up. And then I was patient. I waited. It came back down to 31, and then I initiated with the buy and a pullback. And now we're up to, what does that say? 38. So we've had a big, big move. I've raised my stop from here to 36.50. And we're getting overbought here, just like Chevron, but we don't have a bearish divergence. So um, at some point, we're going to get a pullback. And then at that point, um, you know, I'd probably add some of the shares that I've been selling on the way up, but to a lesser amount. So my position will get smaller as this goes higher. This is the daily chart. So on the daily chart, we do have a little negative divergence here, but not on the weekly. The weekly's a little bit longer term. This is more of a trading style. And I thought about going, here we had a bearish divergence here with the higher highs and lower highs, and then see what happened. Prices drop down. Here we have the same kind of thing, but I did like on Friday that we had a bullish hammer where prices gapped down. Intraday tried to sell off, but by the end of the day, it was back up to the high of the day, showing us that we had some buyers. So, I'm not piling into this at that point. I've lessened my position as things gone up. Like, it's up like 3, 4% in a day. I sell a few shares. If it's up again, I sell a shares too. I sell some more shares. And when it came down here, I added some shares. So that is Brazil. So thank you for watching the 8 buy recommendations. The advice has been solid. I hope you've enjoyed it. Please, love to have your comments, what I can do better. Be nice. Thanks for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Have a great evening, great rest of your weekend, and the day off on Monday. Adios.